that person might just say, okay, that sounds reasonable.
Okay. What are the consequences of a late tax payment?
If taxes aren't paid by the time they're due, then there are penalties for paying late, and there's interest.
Right. Okay.
And the longer you go without paying, the higher those penalties go. The penalty for non-payment accrues at a relatively modest rate of 0.5% per month until they send the magic letter.
I see.
And then it goes to 1% a month, and it maximizes at 25%. So in a not too short time, you can get up to an add-on penalty to whatever tax you owe of 25% plus interest.
Right.
That's a heavy penalty.
So it might be that the person might want to look for alternative sources to borrow this money to settle up with the IRS.
Yes, absolutely. And if you have that wherewithal, it is most likely a good idea to do it for several reasons. First is you stop interest and penalties, which is just a financial saving.
Mm-hmm.
Second is you don't have to deal with the IRS.
Mm-hmm.
You know, you deal with a relative or a friend or even a bank, if you can get a loan these days, is a much more pleasant ordeal, if you will, than dealing with the IRS, which tends to be unpleasant. And the third is you don't have to pay money on people like me.
Mm-hmm. Yeah, that can add on to the bill.
Yes, it can.
Okay. So what are alternatives to payment of the full tax?
That is the question. The IRS, of course, wants to get paid, but they understand that sometimes people cannot just write them a check. So you can get on a monthly payment plan. You can cut a deal for less than full payment. That's called an offer in compromise, and it is the only procedure available under the Internal Revenue Code for resolving a tax debt for less than 100 cents on the dollar, or less than full payment.
Mm-hmm.
It's called an offer in compromise. An alternative in some cases may be bankruptcy. Mm-hmm. Some taxes can be discharged. Most income taxes can be discharged as long as they're old enough. You know, it's not necessarily the most pleasant thing to talk about, but it is a tool that in appropriate circumstances should be used, or should at least be considered.
Right. Okay, and we talked about, let's see, I don't know if we talked about installment agreement, of course that's number one. And then we also talked about not presently payable. So maybe you can explain that for a moment.
Yeah. An alternative, I won't say an alternative to collection, but under certain circumstances, a taxpayer can satisfy the IRS that at the present time they don't have the ability to make any payments at all. And the IRS does have a procedure, a classification for that, to put it basically on a temporary hold. Now, interest and penalties continue to run during this period, but at least if you are successful in getting that classification, then you can comfortably know the IRS is not going to garnish your wages or seize your assets.
Okay. Now, we talked a little bit, or you mentioned bankruptcy. Can you explain a little bit about what amounts due to the IRS are actually dischargeable in bankruptcy?
It gets a bit technical, but yes. I'm going to confine this to income taxes, because that's what's going to be of concern to the most people. All income taxes are dischargeable just like your credit card debt or any other debt, with a couple of rules. The first rule is that they must relate to a tax return that was due more than 3 years ago. So we are now in December of '09. The last tax return due date was October of '09 on an extended return. So minus 3, it's a 3-year period, so minus 3 years is what return was due in October of '06.
So
It's a 2005 tax return. So right now, 2005 taxes and earlier income taxes are dischargeable. I'm not going to say they can be discharged. They fall into the bucket that says under the right circumstances they are dischargeable. The second rule is that a tax return has to have been filed for more than 2 years. So if you owe money on your 2005 tax return, but you didn't file that return until last month, even though that return is the due date was more than 3 years ago, it's still not dischargeable because the return hasn't been filed for 2 years.
I see.
There's another rule that the taxes must have been assessed, which is the IRS bookkeeping entry that says that you owe us this money for more than 240 days. Those are the three primary rules that get you into the bucket where they are eligible to be discharged. Even if you're in that bucket, there is a significant exception if the taxes are found to have been due to any attempt to evade or defeat the tax or the payment of the tax. It doesn't apply too often, but it's there. It needs to be recognized and evaluated before you file bankruptcy and hope to discharge taxes.
Okay. So very briefly, because there's a number of other things that we did want to get into, but let's talk about trust fund taxes, particularly as it relates to this bankruptcy issue.
Non-dischargeable.
Right.
End of discussion.
Okay. So
and trust fund taxes
let's explain what they
are the portion of the taxes that an employer withholds from the pay of the employees. You know, you get a paycheck, you made $1,000 this week, you don't get $1,000, you only get $777.87 or whatever it is, because they withhold income taxes and 1/2 of the Social Security and Medicare tax and state income taxes. Well, state taxes aren't a federal trust fund,
right.
they're a different problem. But for the federal trust funds are the withheld taxes. And sometimes, believe it or not, employers withhold those monies from their employees and don't send it to the IRS.
Very upsetting.
And when an assessment of that is made against the employer or certain people at the employer, that's called a trust fund assessment. And the trust fund tax is never dischargeable.
Okay. So we have to move right along. How do I get an installment agreement?
Well, you ask for it.
Okay.
The process is the IRS will ask you for financial information. Let me start out by saying, first of all, you are not required to give them any financial information. If you don't, you will not get an installment agreement. But a lot of people don't want to disclose certain things to the IRS, and I understand that. But the consequence of that is you will not get any relief on the collection action from the IRS. Well, why would you want to disclose this to them? Well, to get that relief. Well, let's start with the installment agreement. And the basic thing that they're going to look at is your monthly income and expenses. And the expenses that they allow and the expenses you actually pay may not be the same thing. They have certain allowances. But bottom line, take-home pay minus what they allow as expenses is what they call a net monthly disposable income, and they're going to expect you to pay that. So if your take-home pay is $1,000 a month and your allowable monthly expenses are $800 a month, they're going to expect you to pay $200 a month on your installment agreement.